Have you ever stopped to think about what money actually is? Every day we use it to buy food, pay bills, or maybe save it for the future. We swipe our cards, tap our phones, or hand over some notes and coins. But behind these everyday actions lies a deeper question. Is money just paper, metal, or numbers on a screen? Or is it something far more fundamental? Something that has shaped how societies work, how economies grow, and even how civilizations are built. To answer this, we need to look at money from several perspectives: its history, its functions, its evolution, and its role in today's world. Long before money existed, people traded through barter. Imagine you're a farmer with extra wheat, and you want shoes. You'd have to find a shoemaker who not only makes shoes, but also wants wheat. This system worked for small communities, but it was highly inefficient. What if the shoemaker didn't want wheat, but wanted milk instead? Trade became complicated, and economies couldn't grow larger than small groups. This problem created the need for something more universal, something everyone would accept in exchange for goods and services. And so, the earliest forms of money were born. In different cultures, things like shells, salt, and livestock were used as money. The key idea was simple. Money is anything that people agree has value and can be used in trade. Economists usually define money by its three main functions. First, money is a medium of exchange. It allows us to trade goods and services without the hassle of barter. Instead of finding someone who wants your wheat, you can sell it for money. Then use that money to buy shoes, milk, or anything else you need. Second, money is a unit of account. This means it provides a common standard for measuring value. Think of it like a ruler, but instead of measuring length, it measures worth. Without money, how would you compare the value of wheat to a pair of shoes or to a cow? Third, money is a store of value. This means it allows people to save wealth for the future. If you accept money today, you can hold it and use it tomorrow, next week, or even next year. Of course, this depends on money holding its value, which is why inflation or unstable currencies can become such a big problem. These three functions, medium of exchange, unit of account, and store of value, are what makes something truly money. Over time, societies began to standardize money. Ancient kingdoms used gold and silver coins because they were durable, rare, and universally valued. Precious metals became trusted forms of currency for thousands of years. But carrying gold everywhere wasn't convenient. So governments and banks introduced paper money, which represented the gold stored in vaults. For a long time, this system was backed by the gold standard, meaning you could exchange paper notes for actual gold. Eventually, however, most countries abandoned the gold standard and adopted what we call fiat money. Fiat money is currency that has value simply because a government declares it does, and people trust it. The dollar, the euro, and almost every currency in the world today are fiat currencies. They are not backed by gold or silver, but by trust in the system that issues them. And now, in the 21st century, money has gone mostly digital. We rarely carry coins or paper. Instead, we use credit cards, online transfers, and mobile payments. On top of that, we've seen the rise of cryptocurrencies like Bitcoin and Ethereum, which are decentralized and not controlled by any government. These raise new questions about the future of money. Will digital and decentralized systems replace traditional money? Or will they exist side by side? So, why does this all matter? Money is not just an object. It's a social agreement. It only works because we collectively believe it works. If tomorrow people lost faith in a currency, it could collapse overnight. We've seen this happen in countries suffering from hyperinflation, where money became practically worthless. Understanding money also helps us understand economics, personal finance, and even politics. The way money is created, managed, and distributed affects inflation, inequality, and global trade. If you understand money, you can better navigate your own financial life and also make sense of the larger world economy. So, what is money? It's not just paper, coins, or numbers in a bank account. It's a tool, a medium of exchange, a unit of account, and a store of value that has evolved with humanity itself. From shells and salt, to gold and silver, to the paper in our wallets and the digital currencies in our phones, money reflects trust, cooperation, and the shared belief that it has value. The next time you buy something or save a bit for later, remember, money is more than what it appears. It's the invisible thread that connects our daily lives to the history of human civilization.